Yes. I came here to just give you some few things that because we were talking about we're talking last week. I was talking about how do you actually make an entry on the market, and there was this thing, Guti. Yes, we can see how you are able to make entries on the market, but how do you then actually account? Because there were some things that I also mentioned, such as risk management. How do you then ensure that regardless of what you're doing, you are still able to make sure that you've got proper risk management? Because that is also crucial. It's the in essence, it's the most crucial thing that can determine whether you are a profitable trader or you're not. So yeah, I just thought let's come and perhaps maybe talk about risk management, risk management, so that people can then understand what exactly are we talking about when we're talking about risk management. So what does it entail actually? Basically, it's just more about being able to calculate your risk appetite, and your risk appetite will then be able to tell you how much of your risk tolerance are you able to be able to take, and as such you'll then be able to arrive at that risk management. Arriving at risk management, then you'll then be able to determine your control measures. Your control measures, it's more about exactly things such as your stop loss and your take profit. So basically, you'll then be determining that this is the level of loss that you are able to tolerate when taking this particular trade. And you are taking this particular level of loss in order to make this level of profit. So for an example, you can say that for every trade, let's say for an example, you are trading with 10,000 rands. If you are trading with 10,000 rands, you are willing to actually lose 1% of that amount for every trade that you actually take. So which means that you are willing to lose just around 200 rands for every trade that you'll be taking. And what is then your take profit? You are willing to lose 200 rand for what margin of profit? Your margin of profit, I always say that it must at least be 2.5 or three times your stop loss, which means the amount of money that you're actually willing to lose. So I would say that you are actually risking 200 rands in order to make 500 to 600 to 1,000, depending on how big that trade actually is. So this is actually what we are then going to be discussing, so that you can then be able to understand how do you actually attend to the market approach. So in that way, you'll then be able to see how do you actually approach the day and how do you make sure that you are a profitable trader. So guys, we're going to then go to the charts and try to demonstrate some of these things, or all of them in essence, of all of these things. How do you then approach the market and be able to make sure that you are a consistent trader on the market, regardless of how much you might be able to lose on a particular day. I'm just gonna now touch up more on the practical side of how do you then apply that risk management. How do you then apply that risk management in order for you to be able to see exactly what we're talking about? So guys, as you can see here, there is a structure that is then developing. So we're going to assume that the structure is going to work the way it is. But regardless of whether it works the way it's being structured here, it doesn't matter, because it's not like we're looking to make profit here. The purpose is to demonstrate how do you then apply risk management, and also to show that in an event of losses, how do you then remain profitable in going forward throughout the day when you are, because how we are then going to measure whether you are profitable as a trader or not is dependent on us measuring the difference between your profit and the difference with your loss. So it is common knowledge that your profit should be more than, I mean, you making profit should be more than making your losses. So that way we are then going to be able to say that you are a profitable trader. It's really got nothing to do with whether every time you make you enter a trade is profitable or not. There is no such trade, and anybody who claims that, you must know that he's a scammer. So guys, let me just reduce the speed here. So when a trade is like this and then you want to make an entry, you should be able to make your calculations. Okay, this one is going to the upside because we're looking for something that is going to the downside. So we're then going to be able to measure whether this is going to be profitable or not. So we're then going to do it this way. Okay, let's drag it to this side. I'll put it here. Okay, let's drag it a bit up because we should enter just around here. Yeah, I think it's sitting well. So I think our take profit should be somewhere here because I can see a new structure developing here. So this should be our first level of taking our profit. So you can be able to make multiple entries and then allow others to continue. So I would allow this one to go all the way to here, because as you can see, there is a new level here as well. There is a new level here. So as you would notice that this trade, the level of loss is very minimal. It's just around 3.74%. But when you take it to this level, you can see it's somewhere around 18.59. So this is telling us that the profit, the amount of money that we're actually risking is 6 times lesser than the amount we stand to make if we get it right. So let's try to shift it up and see what will happen to this trade. Okay, as you can see, we're triggered in. We are sitting at a profit. Let's see how far it goes, whether we can be able to trigger our profit. Remember, guys, immediately we reach this level, you actually shift your profit and put it somewhere over the entry, so that no matter what happens, you don't see yourself sitting in massive profits and then later on you end up sitting in insignificant losses. So as you can see, let me just increase the speed so that it moves quicker and we don't waste our time trying to do something that should have just moved quickly. As you would see, our first take profit is triggered. So we'll allow it to continue moving. Hopefully it will not, it will still come and hit the second take profit. You guys, when you are sitting at this level, you need to exercise patience. So as you would see now, you will then move this thing again to somewhere here, which is your stop loss. As you see, guys, we've just hit our take profit. So I'll stop it right there. We've hit our take profit. So as we've hit our take profit, we'll then go and try to attempt the second trade. As you would see, we got 6 times We got 6 times the amount that we had risked. So at this point, I would say we should be sitting at somewhere around 1,200 in profit that we were seeking to actually uh, take as our profit. So in this sense, now I would then say, guys, we'll assume that the trade is still going to the downside. Whether that is correct or wrong is irrelevant, because here I'm not necessarily teaching you how we actually apply price action, but I'm just trying to show you how do you then maintain proper risk management to ensure that you are profitable in your trading. So I would say here also, because it's a new structure, also will assume that we're still going to the downside. So here we'll then put it outside the structure, and then we put this one here. As you would see, it's 3.78, and then here it's 5.86. So it's just 1 point something. So we'll drag it all the way. Let's see it. Let's see how far we can drag it. Let's bring this forth, and then we'll bring this one. I want us guys to be able to see where exactly we can then be able to put it. Let's put it down there, because here we can see there is a new structure that is put in place. So I'm hoping that it should be able to hit this level. So yeah, guys, let's see how far it goes. We've hit our stop loss, as you would see, guys. Here we've hit our stop loss. So having hit our stop loss, you would then notice that it is just around 3.78. This one here was around 18.59. So 18.59, 3.78, we're sitting at a profit of around 15. So let's allow the chart to move, and then we can then be able to possibly just enter the last one. Hopefully it does not end there. It looks like it has ended, but guys, as you would see, I was just trying to demonstrate to you how do you then apply risk management in a real trade. So the purpose here is to show that you can still be profitable even if you do lose some couple of trades in a day. So if you were to enter a trade, let's say even if you were to enter the next 3 trades and still lose, or 4 trades, you'll still be profitable when we take it in a grand scale, because making a comparison between the two, the profit and the losses, you'll still be sitting at 1,200 profit and 1,000 in losses, assuming that you would have lost and the next 5 trades. But in this sense, when you have traded 2 and you got 1 correct, you are sitting at a profit of 1,200 and a loss of 200. So that is how we are then going to be able to apply our risk management strategy. This is the super wolf, guys. I was just trying to come and demonstrate how risk management works. Hopefully, guys, you gain something from this. Yes, I'm signing out of this.